Alright. Hopefully I did that alright. I'm trying a new method for starting the live. Let me double check. Excellent. Content live. Okay, yeah, looks like we're live. Sweet. Alright, let me just get the chat up here. I hate that it makes me do all this and makes me go and pop out chat. Alright. Okay, so let's get started. First off, I hope you guys are having a good beginning to your week and everything's going smoothly. Today we're going over magic formula investing. This is something that a trader named Joel Greenblatt made. He was a hedge fund manager, really good in business, professional stock trader. And this might not be interesting to everyone, I guess, or I suppose. It has a lot to do with value investing, but it's something I feel like a lot of people can learn from because, one, it shows the intricacies of an actual strategy, right? A lot of people come up with like match the MACD and RSI, and they call that a strategy, but I mean, technically it is by definition, but an actual strategy usually is very intricate and looks for very specific setups, right? We also usually want a little bit of everything. By all means, if you just use technical analysis and are making money, and your overall PNL is above market, then keep doing what you're doing. Don't let me tell you different. But for mass majority of people, myself included, usually using a mix of everything is what will get you the best results. And a lot that for people that pay attention in the Discord groups, this was like the stepping stones for my value investment portfolio, which um, since I started it about 2 years ago, I think it's a little under 2 years ago, I'm up a bit over 2,000%. So this is the stepping stones for that portfolio, and this is kind of what started me off, and then using this um, investment strategy, I kind of built upon it, customized it to myself, made it more for me, and through that, I have made a very successful portfolio. So yeah, let's get right into it here. So, magic formula investing refers to rules-based, disciplined investing strategy that teaches people a relatively simple and easy to understand method for value investing. That's the other thing I forgot to mention is a lot of people don't realize that real strategies are very rule-based and disciplined, right? Um, when people say they come up with a strategy, you should be able to back test it and then it show really good results. If you're back testing your strategies and it's not showing the results that you're making, then there's one of two things going on. One, it's not as good as you think, and it only works in very specific scenarios, even though you may feel like you're using it in all different kinds of scenarios. The market goes through a lot of cycles, goes through a lot of events. It's a lot more than just bullish or bearish. There's sector cycles, market cycles, a whole lot of events that go on in the market every year, not to mention when events like COVID and things like that happen. there's a lot of changes in the market. Oh, hi Daniel. What's up? So, um, even if you use a strategy for 2, 3 years, you could still be not testing that strategy in all scenarios. The second thing that may happen if you're back testing a strategy and it's not showing the results you're getting is you may not be fully following that strategy, right? Uh, Great example is moving averages. A lot of people use moving averages and make money off of moving averages, but when you use moving averages in a back test, they aren't that great. I believe they have about a 1% success rate. And the difference for that is because a lot of people use intuition with moving averages, right? And you can't program intuition into a strategy. So, um, that is the two major reasons why strategies, when you backtest them, may not show up the results you're getting and may look poorer than they actually are when you're using them. There's nothing wrong with that. Like I said, if your overall P&L is better than market rate, by all means, keep doing what you're doing. Work at it, make it better. Don't let me tell you different. But for mass majority of people, the more rule-based and disciplined your strategy is, the better it's going to do. And um, uh, overall, just keep that in mind because, like I said, a lot of people will make a strategy like line up the MACD and RSI and then buy and sell. And it majority of time that doesn't really work. It tends to do poorly overall in the long term. So, with that being said, let's get into this lesson, Magic Formula Investing. Magic Formula Investing refers to a rule based, disciplined investing strategy that teaches people a relatively simple and easy to understand method for value investing. It relies on quantitative screens of companies and stocks that is designed to beat the market's average annual returns in the S&P 500 to represent the market return. Put simply, it works by ranking stocks on their price and returns on capital. So that's the nice thing about this investment strategy. Anyone can do it. It's very simple. You can beat the market with it. It's a good introduction to value investing. Like I said earlier, it's the stepping stones to my portfolio that's now over 2,000% in just under 2 years. Um, it really gives you that good approach to value investing that I think a lot of people miss. Magic Formula Investing tells you how to approach value investing from a methodical and unemotional perspective. Developed by Joel Greenblatt, an investor, hedge fund manager, and business professor, the portfolio applies to large cap stocks but doesn't include any small or micro cap companies. So, sorry to tell you, my penny stock folks, um, this won't help, but I feel like that's kind of one of its advantages, right? I've talked before about penny stocks. They tend to be really volatile unless you really, really know what you're doing. You're likely just going to lose out on a lot of money that could be put elsewhere and made better gains. Um, so, understanding the Magic Formula investing strategy. The Magic Formula strategy was first described in the 2005 best-selling book, The Little Book That Beats the Market, and the 2010 follow-up, The Little Book That Still Beats the Market by investor Joel Greenblatt. Greenblatt, founder and former fund manager at Gotham Asset Management, is a graduate of Wharton School at University of Pennsylvania. He's a adjunct professor at Columbia University's Business School. In the book, Greenblatt outlines two criteria for stock investing: stock price and company cost of capital. Instead of conducting fundamental analysis of companies and stocks, investors use Greenblatt's online stock screener tool to select the 30 to top 50 companies in which to invest. Companies' rankings are based on the stock's earnings, which are calculated as earnings before interest and taxes. Their yield calculated as earnings per share divided by the current stock price, and their return on capital measures how effectively they generate earnings from their assets. So, we'll get more into the stock screener and everything like that. It lays out all the requirements for it so you can make your own. A good tool I would suggest, I know they said Greenblatt has an online stock screener tool, but another one you can use is TradingView. It should have in its screener, I know a lot of people don't realize it has a screener, but if you go to the TradingView screener, it should have everything for you to set these up. Have you ever thought about sharing your portfolio? 2000% is pretty extreme. Yeah, I mean, I don't share like what assets I'm buying because I'd rather teach people. And when you just show assets, people just herd, the whole herd mentality. They just buy in, and then everyone doesn't know exactly what you're doing, when to sell it off, or what else to do. Um, I also have another portfolio that's up a little over 50,000%. If you look, um, I'm not sure which group you're in, but all the Discord groups I'm in should have a channel called Trilly's Courses. And if you go on there, you can see screenshots of all my portfolios and their gains and everything. Um, it's kind of why I started this whole stock hour and giving people these lessons, is because a lot of people saw my portfolios and they see that I do really good, and so everyone wants to learn like what I'm doing and how to do it. So yeah, you can definitely check that out. But like I said, I prefer to teach people rather than have people follow me. It's kind of the whole feed the fish, you can give a man a fish for one day, or you can teach him how to fish, and he'll have food for the rest of his life. I'd rather teach people how to fish. I'm doing good, thank you. Um, so the requirements for the magic formula investing: set a minimum market cap, typically higher than 100 million. Ensure you exclude any financial or utility stocks when you choose your companies. Reason why you want to do that is because overall those tend to not perform as well. They're usually in kind of the bottom of the barrel. There are obviously exceptions, but overall they tend to not. They tend to be more steady, right? And when you're trying to beat the market, you want the really good runners. Exclude any ADRs. These stocks are usually in foreign companies. Uh, Calculate each company's earnings yield. That's EBIT divided by enterprise value. Calculate. Yeah, I can check your DMs. Can you check my DM in Discord? Yeah, I can check it after the live stream. Calculate each company's returns on capital. That's EBIT divided by net fixed assets and working capital. Rank selected companies by highest earnings yield and highest return on capital. Buy 2 or 3 positions each month in the top 20 to 30 companies over the course of a year. Each year, rebalance the portfolio by selling off losers 1 week before the year term ends and sell off winners 1 week after the year mark. Repeat the process each year for a minimum of 5 to 10 years or more. According to Greenblatt, this magic formula investing strategy has generated annual returns of 30%, which, as most of us know, the market usually returns around 8 to 10%, depending on what's going on. Though they differ in calculation of returns from the strategy, a number of independent researchers have found that the magic formula investing approach has showed good results when backtested compared to the S&P 500. So, overall, really good strategy. If you guys want to screenshot this right here or do whatever you need to, these are the requirements for the strategy. and overall really lays out a good beginning. Like I said, this was the stepping stones from my value investing portfolio, and then I kind of modified it here and there, made it better to suit me and my investing strategies and what I like, and overall it's done really well for me. Um, there are some pros and cons. It's very easy to follow, obviously, really good pro. It facilitates rational numbers based on investing without emotion or stress, and it shows better than market returns in multiple backtests. Few cons. Returns do not always match the high figures which Greenblatt achieved, and some analysts believe the method can be improved by introducing new variables or rebalancing more frequently. So that's something to keep in mind. Like I said, I've definitely, obviously, improved it for me personally using different figures. Overall, my biggest suggestion would be keep what he's already laid out, but don't be afraid to add more, right? Like a good one that I found that adds a lot is ROIC, right? He talks about return on capital, but he doesn't refer to return on invested capital. That's a good one to keep in mind. Um, so yeah, definitely a good layout for a really good value investing strategy for everyone, in my personal belief. If anyone wants to look more at this, I will post the link in the chat. And yeah, overall, that's the lesson today. A good foundation for value investing. Does anyone have any questions about it? Possibly anything about the magic formula or anything that I've gone over? Alright, doesn't really look like anyone has any questions. If you do, feel free to type them in the chat. And then we will move on to the market analysis for the coming up. Yeah, you're definitely welcome. You're definitely welcome. Alright, so looks like the Buffett indicator still overvalued. It's climbing, which is good, right? That's definitely representative of the bullish overall outlook the market has had recently. We're still increasing, um, but do keep in mind that it is overvalued, so um, could lead to starting to decline if it gets too high. But then again, as you can see, when you look at the overall market, there's been these highs, and then we kind of come low, and then we make a new high. So we could come back low, but I don't see us really getting extremely low, if that makes sense. I see us kind of trickling down, and then probably making another new high after a while. Although, of course, this is over the course of a couple years. This isn't anything immediate. Economic events we got coming up. Uh, we got the manufacturing survey for Dallas and the core trend inflation. Not too important. The core trend inflation could definitely give you some info. Um, Consumer confidence jolts and the Texas retail outlook survey. Again, nothing too important here. Definitely, I mean, obviously, all this is important and you should take a look over all of it. But I think the most important right here is going to be on the 31st. We got the employment cost index and the corporate bond market distress index. So these are definitely two ones to look at. It could tell you a lot about what's going on in the market, right? And what we got going on. And then for February, we got we got a lot coming out. Um, so the ADP National Employment Report, initial claims, productivity and costs, construction, ISM manufacturing, and the weekly economic index. Definitely a lot going on there. Can tell you a lot about what consumers are thinking, right? I mean, all of us are consumers, but it can give you a good overall assessment of what the market is showing for what people are buying, selling, the cost of goods, etc., and which can tell you a lot about the market overall. And then Friday, we have employment situation, U.S. auto sales, manufacturing shipments and orders, Michigan consumer survey, and the New York Fed staff nowcast. So, again, lots of good info. Um, can definitely tell you a lot about what's going on in the market and how the overall economy is being affected by things like inflation and stuff like that, and give you a good heads up on what's coming for the year. Fear and greed index. Right now we're in extreme greed. Last week we were in greed, so this shows that overall more people are buying assets right now in the market. So definitely good, but do keep in mind that just because we're in extreme greed doesn't necessarily mean you should go out and buy everything, right? It's your personal opinion on how you use this, but overall, that means lots of people are buying everything right now, and so, um, yeah, buy it up. Um, I think, yeah, 1 month ago we were at extreme greed, but we were at a higher level. So, kind of having this bounce back, um, yeah, definitely worth keeping an eye out on. Momentum. So, we had this nice spike on the 24th. Do you expect a reversal anytime soon? Personally, not really, especially since the Fed said that they're going to stop price hikes unless they see something immediate like inflation spiking up again, like the major spike up that we had before. So I personally I think this is going to be kind of a readjustment period for the market, and overall, especially this next year, we're probably going to see some pretty good returns. But it's kind of hard to tell this early in the year, in my opinion. That's just my overall assessment based on how the end of last year went, how beginning of this year is going, and like I said, the Fed said that they're going to stop hiking rates. So hopefully we'll see some good uh, returns this coming year, and yeah. But I'm not I'm not a market guru, you know. I'm just uh I'm just a guy. So definitely try and come up with your own opinions. Don't take everything I say as like gospel. Um, what was I saying? Oh yeah, momentum index. 24th we saw a nice hike. It's kind of dipped since then, but it's still pretty high, especially for the given month. We've seen a nice increase on the momentum index going on here, which kind of makes sense given how the market's been going recently. We've been seeing lots of ups despite the S&P and some of the major indexes coming down. We've still been doing pretty good overall. Mergers and acquisitions, haven't really seen anything since we last checked. Mostly, yeah, there was a shell company bought. Silicone. This company works in silicone, and they bought another company, kind of building up a little pocket there. But yeah, not really too much going on with mergers and acquisitions. Haven't really seen anything exciting since the Johnson and Johnson buy, which we saw like a week ago, 2 weeks ago. So yeah, not too much going on there. Earnings week ahead is going to be wild. Uh, just like last week, we got lots of companies coming out that are big in the market. Everyone from Starbucks to Amazon to who was it? Yeah, Chevron, Boeing, Pfizer, AMD, Qualcomm. We got lots of people coming out this week. So definitely worth to keep an eye on. Uh, it can have a huge effect on the market with so many huge companies in so many sectors coming out all at once. This week can kind of be like a roller coaster depending on how it goes. Um, Major companies to look out for: Monday, we got SoFi. They're a personal investing firm. Personally, I'm not invested in them. I don't hold any shares, but I do like their services. I have my own personal account through them. It works out really well. They have seen a recent pullback, so that's probably why there's the overall hold rating. And oh, yep, despite the stock's pullback in recent weeks, uh, definitely monitor it. They have improved fundamentals, and yeah, consensus EPS estimates aren't there. I don't know why that says nil, but revenue estimates are 571.51 million. Company has exceeded revenue in 100% of the past 8 quarters, missing EPS in only one out of those 8 quarters. So pretty nice when you're looking at companies that definitely exceeds most companies. So very nice to look at. Tuesday, we got Google coming out, or I should say Alphabet. But yeah, they're definitely causing a lot of buzz with how the company's been going. Obviously, a lot of people see this company as just a solid buy, no matter when you're investing in the company. Um, their consensus EPS estimate is 1.60. Revenue estimate is 85.23 billion. Google has topped EPS expectations in 4 of the past 8 quarters and beat revenue estimates in 5 of the 8 quarters. So they're doing pretty good overall. And yeah, I mean that's going to be wild. Um, Again, Tuesday we have Microsoft too, so that could really have a big effect on the technology sector when you got two giants like that coming out on the same day. Definitely keep an eye out on that. Um, the They recently, the U.S. Trade Commission has opened in-depth inquiry into Alphabet, Amazon, and Microsoft deals with artificial intelligence startups, and yeah, they're basically. So I don't know if too many people know this, but a lot of the tech companies have kind of been working together and forming these partnerships over the whole AI movement, and so um, yeah, they're investigating into that. I personally don't think too much will come out of it. It probably won't really resolve in anything, but some people are trying to say it's like a monopoly. I don't think it's a monopoly personally, but we'll have to see how it goes, how the Fed determines it. EPS estimates are 2.76. Revenue estimates are 61.1 billion. Microsoft has outperformed EPS forecasts in 7 of the last 8 quarters, and revenue in 6 of those quarters. Also reporting on Tuesday, we got AMD, Pfizer, Starbucks, General Motors, UPS, Corning, Electric Arts. Uh, Lots of good companies. Don't really see any that jump out. Yeah, lots of good companies coming out. Definitely worth keeping an eye out for Tuesday. Wednesday, Boeing. Yeah, I mean, I hope everyone knows Boeing. But yeah, they're coming out, especially after their poor market performance they've had recently. They've been kind of riding the coattails. EPS estimates are negative 0.75. Revenue estimates are 21.11 billion. They've beaten EPS estimates in just 1 of the past 8 quarters, and revenue just twice of those past 8 quarters. So, haven't been doing too well. They've been kind of declining a lot. And in my opinion, if it weren't for their government contracts, they probably wouldn't be doing that well overall as a company. Wednesday we also got Qualcomm, MasterCard. Um, oh, Nasdaq. That's definitely one to keep an eye out for. Yeah, none of these others really pop out to me. So yeah, definitely got a good one coming on Wednesday. Thursday we got Meta and Amazon and Apple. Oh, and Apple. Wow, that's going to be a wild Thursday. Okay, so yeah, Meta EPS estimates are 4.99, revenue estimates are 39.09 billion. They've topped EPS expectations in 4 of the past 8 quarters, beating revenue estimates in 6 of those. Amazon EPS estimates are 0.79, revenue estimates are 166.25 billion. Amazon has beaten revenue and EPS expectations in 5 of those past 8 quarters. Apple, uh, Apple, we got. Oh, 1 second.
Open.
Sweetie, not right now. Not right now. I'm busy, okay? Okay. Give me a sec, okay? Alright, sorry about that, guys. Thursday, where was I? EPS estimates for Apple are 2.110. Consensus revenue estimates are 118.26 billion. They've beaten EPS estimates in 7 of the past 8 quarters and missed revenue expectations in 3 of those past 8 quarters, so they beat it in 5. Also reporting, we got Peloton, Honeywell, Sirius XM, Royal Caribbean, and yeah, I don't really see any of those pop out for me. So yeah, and then Friday we have Chevron and Exxon coming out with their reports. I don't see an EPS. That's weird. It didn't give us an EPS estimate. All right. Anyways, so yeah, they're they're coming out on Friday along with Bristol Myers and Brookfield Renewable Partners. Not really seeing any others that pop out. So yeah, overall this next week is going to be pretty wild. Could be a huge roller coaster coming out. And then insider buys. Only one that's kind of new is this Calc. We've seen lots of insider buys recently for this one. Big ones too. Uh, Whopping 2 million on two different people, a director and then a 10%er. So definitely worth looking into that company, seeing why they're buying so much, right? Especially in such a short period of time. That's pretty intense, but overall haven't really seen any other exciting insider buys. And yeah, so that's the coming week. Does anyone have any questions or anything they want clarification on about what I went over for this coming week? Alright, doesn't really look like it, so I will see y'all next week. I hope y'all are doing good in the market. I hope you guys excel at your expectations, and yeah, let's make this money. So I'll see y'all next week. I hope you all have a good one.